Hey everyone, welcome back to Corporate Decoder. Today we're diving into RCM Technologies' latest financial report. It's a bit like trying to assemble furniture from IKEA. The instructions are there, but understanding what it all really means can be tricky. We'll be going over the numbers for the year, so let's see if they are making money or losing money, and what they did to get there. This report came out March 12, 2025 and covers the fiscal year that ended in December of 2024. So it's a look back at how the company did last year, and it is published by the rules of the SEC. The main point of this filing is to announce the company's financial results. We will look at the press release they put out about how they did during the year. This is where they tell everyone how much money they made, what their expenses were, and basically how healthy the company is. Let's jump into the numbers. Alright, time to break down the press release. Remember, companies often try to put a positive spin on things, so we'll read between the lines and see what's really going on. This press release talks about what the company did over the last year. It's like a report card, but instead of grades, we're looking at dollars and cents. RCM Technologies is telling everyone about how they did in the fourth quarter and the whole year of 2024. This is a big deal for investors because it helps them decide if they want to buy, sell, or hold onto their stock in the company. Let's talk numbers. In the fourth quarter, the company brought in $65.1 million in revenue. Revenue is all the money the company made from selling its services or products. For the entire year, their revenue was $64.3 million. That sounds like a lot of money, but we need to see how it compares to their expenses to know if they actually made a profit. The gross profit for the quarter was $13.8 million. Gross profit is what's left over after you subtract the cost of making their products or services from the revenue. For the whole year, the gross profit was $55.6 million. So it seems like they're making money overall, but they have additional expenses like salaries, marketing costs, and rent. These expenses are what it costs to run the business. For the quarter, it was $11.9 million, and for the year, it was $46.1 million. This includes things like salaries for office staff, advertising costs, and other day-to-day expenses. The income from operations, which is basically the profit from their main business before taking into account interest and taxes, was $1.9 million per business. Net income is the final profit after all expenses, including taxes and interest, have been subtracted. For the quarter, the net income was $1.4 million or 12 cents per share. So after taking care of business expenses, they made 57 cents for each stock. Adjusted EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization, is a way to measure a company's profitability without including the effects of accounting and financial decisions. For the quarter, it was $3.20 million, and for the year, it was $15.1 million. This number is often used to compare companies because it strips out some of the noise from different accounting methods. At the end of the year, they had $7.8 million in cash. This is important because it shows how much money they have on hand to pay bills, invest in the business, or handle any unexpected problems. The CEO, Brad Veazey, said that the fourth quarter results show improvement compared to earlier in the year. He also said they are working on winning new business and becoming more efficient. Basically, he's trying to reassure investors that the company is on the right track. RCM Technologies has different parts to its business called segments. Knowing the earnings for each part is helpful so that you understand where their money comes from. It looks like they have engineering, life sciences, and IT, and finally energy services. The engineering segment made $41.8 million in the fourth quarter. This segment provides engineering services to clients. The life sciences and IT segment brought in $15 million. This part of the company focuses on providing services to companies in the life sciences and information technology industries. The energy services segment made $8.0 million in revenue. This segment serves companies in the energy industry. Now let's zoom out and look at what all of this means. RCM Technology seems to be working to become more profitable. They're making money, but they need to keep an eye on their expenses to make sure they are not spending too much. They're trying to win more business and become more efficient, which is good for the long term. It might be good to compare RCMT to other companies in the industry. This will show how they really are doing. So is RCM Technologies a buy, sell, or hold? It's not a clear-cut answer. The company is profitable, but they need to keep improving. For potential investors, it's worth keeping an eye on RCM Technologies and seeing if they can continue to improve their results in the coming quarters. For current investors, it depends on your risk tolerance and investment goals. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more easy to understand looks into the world of finance. What companies do you want us to decode next? Let us know in the comments below.